following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for unusual options activity alerts, advanced trading strategies, cutting-edge education, detailed market updates, and breaking customer activity. It's time for the One Option Show to rule them all. It's time for the Option Block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from OptionPit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Griegas from Options Express.
Welcome to the Options Insider Radio Network and this latest sneak peek of our newest show, the Option Block. And with that, we will dive right into the trading block.
The trading block.
All right, and welcome to the Trading Block. And this is the segment of the show, in case you're just tuning in for the first time, where we talk about what's going on in the market right now. And guys, what is going on in the market right now? Because from my screens, looks like not a whole hell of a lot.
Oil, black gold, Texas tea.
Texas tea, yeah, there we go.
I like it.
Tusaw, I know you're a commodity guy, so what's going on with oil there?
Oil went up a little bit today. One thing that in the November crude contract, that one actually broke above the 50-day moving average. So of note, oil is moving today. That's probably, from what I can tell, the most interesting mover, so to speak, in the market today, with the stock market's relatively flat. From what it looks like on my screen, the one thing that's actually holding up the U.S. stock market is the energy sector. So in terms of what's moving right now, it looks like oil is right now, and it broke above that 50-day moving average. So might be something to take a look at.
You know, oil's kind of been a little bit schizophrenic lately. You know, on our last show, we were talking about how the NOVE delivery contract had dropped below, I think, 76, down 75 something range, and now it's gapping back up 2%. So there seems to be a lot of schizophrenic fluctuations right now in the November crude market.
Yeah, it's slippery stuff, both literally and based upon the chart.
Aren't you a punny fellow?
You know, the only thing I would point out is that, and we may have talked about this on Monday a little bit, but volatility continues to rally with the market, and that's not insignificant. And on top of that, the back month volatility was up a lot more than front month volatility today. If you look at the VXZ, which is the mid-range ETN for the VIX futures, is up like $1.35 today. Meanwhile, the VIX itself, we're not going to look at the VXX, the VIX itself was up about 65 cents over 23, and this is with the market doing nothing. In fact, the Russell was actually up today, so we had kind of a split-up market with the Russell up and the O and the N and the S all down, and the Dow's down about 23 points. And we saw a VIX up over 0.5%, and this leading into a weekend. Normally we don't see kind of nothing happening on a Wednesday and vol running.
Yeah, that kind of ties into something I think we're going to get into in a later show. We kind of teased it in the last show, which is some of the problems with the VIX. And if you're one of these people right now who's relying on the VIX as any sort of hedging instrument, you're getting your clock cleaned right now. We have a VIX, instead of doing its good old inverse correlation like a lot of people assume, it's actually moving in lockstep with the market, which is not what you want it to do. So yeah, those people out there who tend to think of VIX as a great pure hedge against the market, you may want to reconsider that position, especially in light of what we're seeing over the past few days. Other than that, the general market is looking pretty soft. I think the S&Ps are down about 3 right now. The Dow's down about 25. And other than that, we have not a whole hell of a lot going on right there. So I think with that, we can close up this abbreviated version of the trading block, and we can dive right into the interview block.
The interview block.
Welcome to the interview block, and this is a new segment of the show that we will be adding on a weekly basis going forward. And this is where we bring in someone from some various aspect of the options market or the options industry, and we bring them in to have them give us some of their perspective on what's going on and what they do in the options market. And today, our inaugural guest is Mark Wolfinger, and he has many different hats that he wears in the options business these days, but lately he's hanging those hats over at optionsforrookies.com, as well as being a contributor to Expiring Monthly. So Mark, welcome to the show, first off.
Well, thanks very much. Glad to be here.
Let's start off with what we did with all of our hosts, which is give us a little bit of your background in the option business, and then from there, tell us kind of what you do over at Options for Rookies.
Okay, that'd be great. I started trading options in 1975, and it was only 2 years later that I moved to Chicago and had the opportunity to become a market maker at the CBOE. I was very lucky, I believe, to not have to do any clerking first. I got to start right on the floor. So for more than 20 years, I was a market maker at the CBOE. My primary stock was Hewlett-Packard, HWP in those days. And then I had Bethlehem Steel, which went belly up. But after leaving the CBOE in the year 2000, I've been an educator. I've written 4 books, and for the last 2.5 years, I've been running a blog. And that blog is really what I'm most proud of. The books are basically for rookies, for beginners, and the blog is for rookies and advanced rookies, and I throw in all kinds of commentaries on a variety of topics. So that's my background.
Now, talk a little bit about Option for Rookies. What do you really do over there? Is it an educational service you're offering, or are you kind of just providing some insight into the options market for your readers, or what is the goal of the blog?
Right now, it is primarily an education blog. I have lessons on various beginner topics, but I also discuss pretty much anything that comes to mind. I spend a lot of time replying to readers' questions. We talk about strategies, but I never analyze the markets or talk about the current market or make any predictions, not because that's risky, but because my prognostication skills are non-existent. So I talk strategies in general. Risk management gets major emphasis. So what I'm doing is taking people who are first learning about options or who have some experience but want more education and teaching them some of the finer points. I don't go into the most intricate details. I'm interested in helping people understand how options work, being certain they understand how the risk of ruin can demolish them, and that risk management and being sure that open-ended risk does not exist is taken care of. So I emphasize risk management and I emphasize education. So I would classify myself as a teacher, but I don't have formal classes. I don't do formal mentoring. I write about various topics with the emphasis on being to teach the reader something. And the response from the readers is very good. I mean, they who comment love the blog, and I get all kinds of great questions, and I love to answer them.
You know, it's funny what you mentioned about being a poor prognosticator. A lot of market makers and traders seem to fall into that gap. Some of the worst stock picks I ever received in my life, or the stock tips, I should say, were when I was still on the floor of the CBOE. I got some terrible ones. And, everyone comes running over to your pit on a given day. This one's moving. I got this great tip from so-and-so. And after 5 or 6 of those, I got burned enough times I realized maybe I'll just stop listening to what I hear from the chatter on the floor here.
And the funny part is, I guess not so funny, is the public, the individual investors, they accuse us of front-running. They accuse us of knowing all kinds of things, manipulating markets. We're the last to know anything.
Yeah. So, Mark, that brings up a good point. What would you say are some of the real misperceptions that newcomers to options have about trading options and about what makes an option trader successful?
Well, Mark, the very first one that I know for sure is that people believe trading in general, and options trading included, is easy. You just come down, you make some trades, and you win. And you pocket the money, and that's all there is to it. That's the biggest misconception. I don't know why they do that. Nobody would go out and try to hang a lawyer shingle or open a doctor's office without education and training, but they seem to think that investing in options are easy. I guess maybe they remember the bubble years when all the TV ads made it seem so easy to just buy something and watch it go up 50% in a couple of days. But those days are long gone, and that's the biggest misperception, expecting easy profits without a lot of work. So one of the things I stress is, the importance of taking it easy, practice. Either practice by trading small amounts or practice in a paper trading account. I know that's controversial. Not everybody likes doing that. But I think it's essential. So the biggest one is expecting instantaneous profits. They also believe it's easy. I have found too many people, based on the questions I get, making trades, not understanding what's happening, and after they've made the trades and hold the positions and lose money, ask, well, I made this trade. Isn't this what's supposed to happen? And the answer is no. You didn't understand this or you didn't understand that. So I find that they trade too quickly, but I suppose trading too quickly is based on the expectation that it's essential.
To your point about practicing, I know you mentioned that it's controversial, but so many of the brokerage firms these days have made it so easy to go out and paper trade right now that there really is no excuse for someone to go out there and at least not have some familiarity with basic buying of a call or writing of a put or whatever they want to do before they start trading their own money. Your point about practicing, it's easier than ever now to really jump into that.
Right. Some professional traders don't think paper trading is a great idea because you don't have the true emotional experience. But even if you have a minor emotional experience, just getting practice, entering the orders, being familiar with the trading platform, understanding what it means, I think I'll make this trade now because, and they get that because practice. It's priceless. You really need it.
Yeah, Mark, speaking of traders thinking or newcomers thinking it's easy, I think that is I would agree with you 100% that there's so many people out there that present this as simple. What do you think of a lot of these services and different brokers or different educators out there that do what I like to call blue skying of trading? What are your thoughts on some of these educators and what are signs that you think somebody that you see when somebody's blue skying the trading scape, if you will?
Okay, that's a real good question. The first thing, of course, is that what I can see is not what the newcomer can see, someone who's just coming out there looking, I'm going to learn about options, so I'm going to hire these people. The most obvious thing to me is the promises that just make no sense. There are several people on the internet, companies that advertise, make 10% per month, and it's not so much make 10% per month, but guaranteed. I mean, that's doubling your money every 7 months or quicker, and that's just unrealistic. It seems to me that anybody with any intelligence should recognize one of two things. That can't be true, or everybody in the world would be doing it, or if it is true, the person who knows how to double his money every 7 months isn't going to tell you for a few $1,000 fee. So to me, the blue sky is the obvious overestimating what you can earn as a trader. The other part is I'm not happy with the content of some of the weekend seminars. They promise a lot. Yeah, they give good guarantees of you can take classes again and things like that, but they promise a lot, charge a lot, and to me, it's overwhelming. I don't see how an investor can come in knowing almost nothing and get overloaded with all that information and then expect to do anything with it. A mentoring program that takes longer and goes at the student's own learning rate, well, that makes a lot more sense, and that's viable. But so what I see blue sky is rapid education for immediate results and overpromising. Now, I like what the brokers do. I like that the brokers offer seminars, some better than others, but that doesn't matter. They offer some seminars. They want to get people started, and they want to educate them. Some years ago, all they wanted were customers. Let them go broke. Who cares? We'll get new customers. Now, customers are harder to find, and they take better care of the customers. So I like what the brokers are doing, but the blue sky promises are still a problem.
Hey, my favorite has always been the make money in any market condition. You know, these scammers have been selling straddles to people for so long, and that's probably the number one still option scam is just the long straddle. And so make money no matter what happens in the market, and there's no ever any mention of time decay or expense or anything like that. We still see that one all the time out there. That's probably still one of my favorites, is just the old school straddle scam where no skill, no effort, just sit back and collect your money.
Well, you know, the truth is you can make money in any market. That's true. But you have to know in advance if the market's going to be up, down, or sideways, so you can adjust the proper option strategy. That's the part they don't tell you. Yeah, well, that's the little detail they don't tell you. And I just had I just put down on my blog not so many weeks ago, one of the well-known options players suggests that. I mean, he makes this recommendation: make money up, make down, buy calls. Buy puts. How do I know which stock and when? That's the part they never tell you.
Yeah, Mark, one of my favorite things that you've done is you like to go out, and this is just, I mean, it's, as the Jews would say, it's chutzpah to the highest level. But you know, you'll go out and find what you perceive as kind of ridiculous or hyperbole or just things that don't make sense to you, and then just rip it a new one on your blog. And I think that takes a lot of guts, and it's something that I think anybody who you know reads the big magazines should be reading your blog to make sure that you're not tearing it apart, because they'll learn something about what real traders think. What kind of inspired you to just start, hey, this is ridiculous, I'm going to put this up on my blog and just rip it? What inspired you, and what has been the reaction to that?
Actually, I've had no reaction. I haven't done it enough times to have a lot of reaction, but the very last time I got no reaction at all. So people either appreciate it or are stunned by seeing something that they wouldn't expect. I don't think it's a big deal. I think most people, you know what, Mark, I really can't answer this question. I didn't really do that except with Bernie Schaefer. I'm only saying, I'm assuming we can cut this out.
You had one other one there where I thought you were ripping them apart.
No, I have been out there saying some negative things, but I can't think of anything specific. I'm just...
Well, who was the guy on your blog that I was just reading? That was talking about Arena Pharmaceutical and stuff.
Oh, well, he was just asking questions. I mean, he was a beginner just asking questions. He didn't really know what he was doing. That's what happens sometimes.
All right, well, that's fair enough. We don't have to do the question. All right, that's fine. All right,
but the truth is, I love to go out and get opinions from other bloggers and discuss them, you know, add to them, because I find there's plenty of great content out there. And I do like to be controversial, but it does take courage, and I haven't done it enough times. Okay.
All right, well, you know, Mark, then here's a new question. Are you ready?
Sure.
All right, Mark. One of my favorite columns that you do in Expiring Monthly, as you just for this full disclosure, Mark and I are colleagues at Expiring Monthly. In case you guys hadn't put two and two together, but one of my favorite thing that you do in Expiring Monthly personally is Wolf versus the World, and it to me, and this is just kind of a compliment, your ability to look at something, look at an issue, and kind of, you know, there's certain issues where you're very like, this is the way it is, and I wouldn't take the other side. But you're really good at kind of breaking apart, hey, this is one side of this argument, here's the other, and really kind of seeing the angles. Do you think that skill came from kind of your trading and trying to figure out what the other party was doing, or is it just something you've always had as a writer? You know, what inspired? Where do you think that comes from? If that makes any sense.
Sure, that question makes sense. Thanks, Mark.
Yeah.
Well, where I think it comes from is my less tenured experience as a teacher. I want to show both sides. I love telling my opinion. I love saying this is the way I believe you should do it. This is what works for me. But I'm pretty clear to say, most people don't agree with me on this, or some people don't agree, and here's why you might take the other side. So it's just trying to be fair and give someone who is learning the chance to see both sides of an issue before I ram my opinion down his throat and try to convince him to adopt it. I don't want them to necessarily adopt it. What I want to do is have people consider both sides and then choose the one which seems more logical. Now, to be fair, since they are beginners, they're going to think my side's more logical because they don't have anyone really defending the other side. But at least being aware of the other side and seeing the chance, they can change their minds later. And that's the background before it. So we decided to do this column and show both sides of the various issues. Now, these are not supposed to be very intricate, very detailed decisions. This is supposed to be more general trading, general education, but not necessarily for the beginner.
All right. If you could, let's say I'm a new trader, okay? I'm a brand new trader. And I say, Mark, what is kind of the one piece of advice you want to make sure I get from you? All right? And you've only got a minute to give it to me. And then I'm going to go out and start trading. What would be that one piece of advice that you would really want me to carry with me as I got into trading? I know you're probably going to say, stop trading! But
I was just going to say that. Don't trade is what I was going to say. Okay, well, that's fair. I would say this is not as easy as you think it is, and most of all, be aware of risk. Recognize that when you're buying options, you might lose 80, 90, 100% of what you're paying. And that means lose all your money, and it won't take real long. And if you sell options, understand that although you're likely to win, that can be a very risky strategy, and you might lose far more than you thought possible. So be aware of risk. That's your primary thing that you will not think about when you're out trading. So if you trade, please consider risk.
Well, I think this has been a proliferation of marks for our listeners. This is definitely the most we've ever had on this show, and probably the most for a new record for the Options Insider Radio Network.
Well, see if you can get 4 next time.
Mark W., I want to thank you for coming on, and Mark S. is staying around after that. But I think that's going to close up the interview block for now, but I appreciate you coming on. We'll definitely have to bring you back on again down the road, where we can discuss some of the more developments going on over at Options for Rookies, as well as expiring monthly.
That would be great. Thank you very much. Oh, I do want to say one thing. The address for my blog is blog.mdwoptions.com.
Oh, perfect. So, yeah, we'll definitely be sure to include that here and also in the show notes. All right, Mark, thanks again for coming on, and we'll definitely have to have you on again down the road.
And Mark L. and Mark S., thanks a lot.
Hey.
Bye-bye. Bye-bye.
The Odd Block.
And welcome to the Odd Block, and this is the segment of the show where we discuss some of the interesting or unusual options activity that we are seeing in the market today. And we have a couple of little names today, which is always fun to look at in the Odd Block, starting off with BCSI, or Blue Coat Systems. This one was trading around 25 today towards the close, and most of it has been gapping up lately, up about almost 7% lately on some renewed takeover chatter. And this company, they make a wide area network optimization software. So another one of these tech takeovers looking to dominate the market here. And we saw a lot of, not surprisingly, we saw a lot of bullish options traders coming in to take stakes in BCSI, starting up with some, we saw about 1,100 of the OCT25 calls being purchased for about 75 cents. So those are about at the money calls. So those are moderately bullish. And then we also saw the bulk of the trading, actually, and some little more optimistic guys were the OCT26s, and 8,100 of those were purchased today the bulk of them for about 45 cents. So these are people obviously looking that think the stock's going to rally a little bit more before October expiration. The not that high of a break even. Not surprisingly, the volatility is also up about 14% today to an overall of about 54%, although I think it kind of trended off towards the close and closed around 50%. But yeah, not surprisingly, takeover chatter causing a bevy of bullish option volume in BCSI.
That's exactly what it looks like. All the volumes in October. If this is going to get done, it looks like this thing's going to pop fast. So the way looking at implied volatility in October, the IV in October is about 50%. You can get into November, a touch cheaper, but not a lot better. If you think this is something that's going to happen in the near term or this rumor is going to get hot, the October is the right one to buy. If you think it's going to take a little longer, then I'd be going for some of the later term months. Or heck, take advantage of some of that October and sell premium. Sell the 22.5 put spread and collect an easy buck if this thing does catch a little bit of a rally. Make premium your friend instead of premium your enemy.
Right, and then the other way with which you can go with it, if you're looking to make it a quick trade like that, there's no rule that says you're not allowed to do the 25-26 call spread. It's out of the money, so that obviously we'll need a little bit of a rally for it, but it's one of the ones to where it's a double or nothing type play, in that you can probably get into the 25-26 call spread for 50 cents, depending on the fill that you get. But if we're above 26 at expiration in 2.5 weeks, then that's a double.
That's a nice trade.
Yeah, and that would probably take advantage of a little bit of maybe a modest skew disparity we might be seeing with some buying on the 25s, but a heck of a lot of buying on the 26s. You're going to see a lot more of implied vol inflation on the 26 strike than you are on the 25. So if you buy on the 25, sell the 26. Let that skew play in your favor a bit and get a call spread for a little bit cheaper than you might otherwise have been able to get it.
Yeah, the great thing about when skews get out of whack, even if you're wrong, it ends up costing you a lot less than, under normal circumstances. And that's really the advantage of taking advantage of those call spreads.
It's a wonderful thing.
That's probably another good topic for another show down the road or a strategy block, is all the vagaries of skew. We can probably do a whole show just on that. Definitely one to keep in mind. And moving on, before the show, I was teasing Mike Tusaw a little bit, and I was telling him I wanted to talk about Schlumberger. But we're going to talk about Schlumberger, which is SLB, and they closed at about 62 today. And looks like same thing as we saw in the previous name. We saw a lot of near-term bullish options activity with people jumping into the in-the-monies and some near out-of-the-money calls. Looks like we saw a lot of buyers of the OX 60s, 5,000 buyers of those. They paid about $2, $1.97 a piece. So obviously they're looking for a close at around 62. Again, a little more optimistic traders moving up to the 62 half strike, where we saw 4,300 buyers of those out there for about 76 cents. So these are another ones. These obviously think that the stock's going to close about 63.25, 63.26. These guys have a little bit more bullish run to move. But again, looking to see what the driving force behind this bullish activity is. And I know, Mike, you like to keep an eye on SLB every now and then. So do you see anything interesting going on out there that would merit this near-term bullish activity?
Well, a couple things. They had some news that they bought some debt today, and so I think that was a bullish sign. But the other thing that I'm noticing, I think, is a little bit more from the technical standpoint. We're actually getting closer to the 200-day moving average with it. Now, full disclosure, I have clients in short puts on SLB, and I've been trying to get into this stock for clients for a while now, but it just hasn't quite gotten low enough for me. But nonetheless, we are in short puts on it right now, so full disclosure on that. But I think within the near term, if you look at the chart from today, we're actually going right up, and we're to the stage to where we are just below the 200-day moving average, and I think if we can break above that, I think that would be another bullish sign. Now, as a short-term option trader, if I'm a technician and I'm looking at that, I'm thinking, okay, I'm going to take a smaller section of my portfolio, and if I am bullish on it for the short term, then I'll take a smaller section of my portfolio, which in this case it may or may not have been a small section for the person doing all this activity, do an option trade, and then if we do break above that 200-day moving average, that could be a huge play for it over the time being. So that's what I'm seeing on Schlumberger right now. And Mark, what are some of your thoughts on it with the trade that went on with the mechanics of the option trades?
You know, one of the things with Schlumberger has been, all of the kind of drillers and different things like that got just absolutely slapped with BP, and a lot of them are starting to really kind of rally back. My guess, with this trade is it's a nice, cheap, short-term bet where the guy's pretty sure he's going to win, and he doesn't want to risk the downside in case there's some sort of, oil explosion, which everybody seems to be absolutely afraid of. We're seeing it in not just Schlumberger, but if you look at NE, which is Noble Corp, you look at even Halliburton, or which isn't exactly related, but is along those lines. Any of these companies, they're all kind of creeping up. Heck, British Petroleum's doing better, as I think people are feeling a little nostalgic about these companies now that we're finally past the oil spills and everything is all filled up. That's my general kind of what I'm seeing across the board. My guess is it's not just SLB; it's also that entire industry that is seeing this kind of paper flow.
Probably. I wonder how much of it in the industry is concentrated in the near term, like it is in SLB here. It looks like people are really looking for a very near term gap up in SLB right now. I'm not sure if we're seeing the same paper flow. I'll have to go dig in through BP and seeing if there's bullish paper, if it's being confined to front month, or if it's more. I'd guess it's probably more Nove and Decent moving out that direction. Some of these other names have a little bit more they have to weather before they can start seeing the upside again. But I think there's definitely is some general returning bullish sentiment to the overall oil and oil production sector. And then switching gears a bit to another interesting name. This is Ambev, ABV, or going by its more official designation, Compañía de Bebidas das Americas. And they closed around 125 today, and this is of course, the largest beer company in Brazil and the fourth largest in the world overall. And they saw some sizable options activity today, about 85 times their average daily volume. And now piecing these trades together is interesting out there because some of these markets are so wide, and these trades, a lot of them are going up mid-market, so it's hard to see exactly what the customer intended. I haven't had too much time to parse these numbers, and this is an international company, so pulling up their div dates takes a little bit of effort, but this certainly has the hallmarks of a div trade, although you can't be certain. There was a lot of activity on the OC 115 strike. We saw 16,000 go up for about 960, 30,000 for 9.5, and then 20,000 for 980. So a total of 66,000 of the OC 115s alone, and that was the bulk of the volume today. I think the volume was not that much beyond that.
Yeah, I mean, they ended up, I don't know when you pull those up, 2:00, but
a little bit before we started taping.
75,000 of the 115s. That's ridiculous.
Added more. Okay,
that's insane.
15,000 of the 110s, 30,000 of the 105s, 18,000 of the 100s. These are all in the money options. They all have deltas. I'm sniffing something here. Stop me if you think I'm going crazy here. They all have deltas of about 100, 90, above 90, and maybe higher. And they're all just massive, massive plays. And they are, in terms of open interest, they're, relatively speaking, I think they're all the same ratio in accordance with open interest. I have a bet here, okay? My thinking is that ABV may in fact have a dividend coming out that goes X tomorrow. And this was a huge dividend play against very little open interest. What do you guys think?
This is actually a div trade, and this is actually pretty small. These things, usually they will go up. It's not unusual to see these go up in the many hundreds of thousands, if not millions of contracts, some of these.
Relative to open interest, it's pretty big. the open interest on the 115s is 1,600, and they did 76,000 of these. I mean, if you look at that, that's 47.5 to 1. There's a lot of people hoping to get, this dividend. It must be of some major, major significance.
It's funny. This is another thing that goes towards just an alarming and amazing trend in the options market. Last year alone, dividend trades accounted for about 3% of overall volume. If you knock off the dividend trades from last year's numbers, the options market was actually down year over year in terms of volume. So these things are becoming very enormous players in the marketplace, and to the point now where they're distortive. And when you're talking over 3% of an enormous market like the options market, these things are really starting to take a substantial amount of time here. But yeah, this looks like a pretty clear, once you start pulling together the numbers, and a lot of them are mid-market, this is looking like a pretty clear dividend trade.
Well, the issue was it's a foreign company, and so the dividends don't show up necessarily on the traditional systems.
Yeah, because I'm not seeing it either. Like for a future show, like maybe we ought to do like a segment on what are dividend spreads and how people trade them.
Oh yeah, that'd be great, because that's we do a lot of that stuff on the Options Insider. In fact, I just put up this afternoon a radio show with the CEO of the ISE in which he went on at great length lambasting the prevalence of dividend trades out there and how distortive they are. So yeah, that's definitely an interesting topic. I think we can get into.
Around the block.
And welcome to the Around the Block segment. This is a segment of the show where we talk about some interesting numbers on the horizon and some interesting things that may be laying in wait for options traders in the coming days. And what are you two guys looking at in the crystal ball for the next couple of days and into the weekend?
I don't know about a crystal ball, but a couple things that I'm just seeing here in regard to what's going on in the marketplace. Tomorrow we have initial claims. That's something that definitely has the ability to move the market. The continuing claims, and then for Monday, the other thing that we have as well, for Friday, we have consumer sentiment, construction spending, a lot going on. And then Monday, I believe we're taping after the market on Monday, so the other thing that we'll have factory orders, pending home sales, and you may not know this, but Monday is actually National CB Day, 10/4, October 4th.
I like it.
Useless trivia fact for today.
Yeah, and Mark, you have to be careful when you mention Mike's crystal ball, because it reminds him of his horrible bike accident when he was a kid. So
you're not supposed to know about that.
Once again, Sebastian trying to push us towards the explicit tag in iTunes ever so slowly. But yeah, in terms of some numbers on Mark, what are you looking at for the next couple of days?
The two that I'm really going to be paying attention to for Thursday and Friday are the Chicago PMI and the ISM index. Those are two that can have a profound effect on how the market moves, because it's all manufacturing, and despite the fact that manufacturing is a smaller part of the economy, many view it as a very important part. And in these dips, it's been definitely the hardest hit. We also have auto sales and truck sales coming out end of the day on Friday that could really drive things. And as Mike said, factory orders and pending home sales are good things I'm going to be looking at for Monday that I think could really move us around. I'd also would like to kind of warn people that Friday is not non-farm payrolls. It's going to be the following week. There's a lot of people. I just want to make sure nobody's running out there thinking that we've got non-farms on Friday and trading against it when it's just not going to be there. You're going to have to wait an extra week. So those are things I'm looking at around the block. As I said, keep an eye on that volatility. We've been rising in vol and market. So at some point, we're either going to break out to the upside or break out to the downside, because this vol has to go. It's telling us that that the market's going to go somewhere. Okay? It's like I always say, it's like being a bouncer at 2 a.m. You don't have to go home, but you can't stay here. It's kind of what I'm seeing in volatility.
I'll give it my 50% guarantee that it'll be up or down within a week.
I love it.
Or wait, my 33% guarantee. It might be the same, too.
That's going to close out another sneak preview of the option block. And coming into next week, we should be actually starting our first official episodes. So look forward to those. And we might have another changed up schedule next week, just as some of the host schedules are moving around. But we'll get down into a more steady Tuesday, Friday release schedule in the coming weeks. So thanks again for listening to the options block and for downloading it and subscribing in iTunes. And we'll see you again next week.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.